Good morning, Scott Redler, T3 Live. Welcome to today's morning call. So it's Friday, it's been a long week. Today is the relaxed morning call. Very quick, so I'm just gonna get right into it. Wednesday, we had a distribution day. First day that you saw like a 0.5% decline. Yesterday, market opened up pretty, I would say not strong, but opened up a little bit and then stayed strong all day. You saw great action in the banks and some of the casinos and some tech. So all in all, very healthy, still very constructive action with lots to do around the board. You know, the 10-day moving average continues to hold in the spiders and the SPX as well as the Dow. So everything is somewhat in stride. So let's just get right to the chart. Okay, when each time that we've gotten to new levels as we've rode this accelerated uptrend, typically we get to a new level and then we build a new floor. So at this particular point, remember we broke above that 1363, 1364, went as high here as 1378, and now I think sideways action is key. You know, I think if we continue to follow this same trend where you break out to a new level, create a floor, break out to a new level, create a floor, if this is to remain the same, this 1363 to just say 1367 should continue to hold, and then at some point, perhaps, we make another stair step higher to, the 1400 level. And as you can see here, the entire way, we are holding this 10-day moving average. I tweet about it, I talk about it. Look how important it is. If you rode this 10-day moving average and didn't listen to all the naysayers out there, you would never have had to listen to, what people call me sometimes as a talking head. You listen to the charts and you listen to the traders because this is all you've had to do. We haven't even tested the 20-day once. So at this particular point, this has been the trend. Okay, it's been very, very strong. And it could definitely continue. So just keep riding it until it changes. If we see a decisive close below, then we'll switch some gears and we'll figure it out from there. So what helped to fuel the market yesterday was some of the banks. Okay, I'm just going to roll right through them. Goldman Sachs broke above the level we were talking about, that 118. Finally, if you look here at the chart, you will see that this was the level I was talking about, breaking through. This is why I was so enamored with it, because once you break through, you get a nice juicy trade, and that's what we had yesterday. Sometimes, they come in and retest this area or they hold a little bit. I'd say as long as it stays above 118, you stay with it. I'm going to try and stay with some, and I'm going to try and buy some of the dip. And then you could also probably add, if it goes through yesterday's high of 121.24 for continuation. Morgan Stanley's been lagging. I bought some yesterday, and if it starts to get above yesterday's high of, 1932, I'll add to it and I'll try and stay with it. And you could use your stop at the low of this level here. And the low of this level here is about 1821. So Morgan, there's been some chatter about some of their SDSs or whatever it's going on there. So maybe that's why it's lagging. But if the bank stays strong, this could play some catch up. JP Morgan, we've been holding for about a week or so. Nice move, nice extension. Just take trades along the way. Another group that's been really strong has been the casinos. I've been trading this group for 2 years. We've talked about how this channel in LVS is going to break at some particular time, to the upside, and then just, clear a nice move. And first, that level was around 50 and change. It cleared it during earnings. Then it rested above it. And then this week, I got back involved around 54. And now you take a look at LVS, and it just, had a really nice move. And if you look at the pattern here, people are like, oh, how'd you know? How'd you see it? Look at this high-level flag. Nice high-level flag, so short-term for cash flow, buying above 54 made sense. Nice 3-day move, you take some off. If you're an investor and you're not worried about the short-term, look where we are. We're just getting above this channel here, and that's why I said 65 or more would make sense, because look at on the long-term chart. Here is your real next resistance. Actually, it's closer to 80. But anyway, I didn't want to sound too optimistic, because then people would get upset. Seems like lately people don't like optimistic people. They don't like realistic people. They just want to call doomsday things because misery loves company. But the bottom line is, there's been something for everyone in this market. Look at Lululemon. If you're an investor and you're a stock picker and you just sat and held besides being a trader, you could have made nice money, right? Historic highs. Look at the chart here. This is the long-term chart. The daily chart also. You had a nice trade as a trader too, right here. So, if you want to be pessimistic or negative, you can't be negative or pessimistic if you're an investor in Lululemon, and we've talked about this so many times. But anyway, you also have other charts like Under Armour that's doing well, and there's a lot of good names out there that you can invest and also trade. Back to the casinos, Win also was a different trade. It was a stock that was under pressure, that was in a downtrend, and there was an opportunity there. They got the shareholder lawsuit out of the way. It had two different trend lines to trade through. I pointed this out with Jim in Mad Money, and he went over it very well. And here was one of them right here. Okay, nice little breakout above this mini descending channel that typically breaks to the upside, and then you had some follow through. Now there's some news out. It's up like $2 this morning. If you bought here, initiated, and you want to sell some into this third day, be my guest. That's a nice cash flow 3-day great strategy. And if you're someone who holds it longer term, you know what? Put your stop in around 118, and I think you probably get 130 to 135 over time. But it's going to take time. Things just don't happen, so quick. And so as far as some other tech names, IBM still hanging around. I'm really not going to get interested until it starts trading back above that 198.50 to 199.29 for some momentum. It's still just hanging out there, a little frustrating, but rightly so. It's intact. Microsoft I went over yesterday. If you guys are still in this, congratulations. This is when we talked about it on Bloomberg right here when it was acting frisky, and now look at this move. So if you wanted to take some off, I would say be my guest. I put a $32 to $34 price target back here. I didn't think it would happen in the first quarter. So it's still moving well, but at this point it's going to be coming into some of this bigger resistance here, and after a nice break of this little wedge here, take a little bit off. But I think that it still has higher prices. Yesterday Zynga came back on the radar. Nice move. Take a ZNGA. Started buying it yesterday when it cleared this nice little descending trend line, and now it's opening up. If you bought it right in this area and you want to sell some above 15, be my guest. But a lot of sell side guys I talk to are saying, north of 20 or don't even look at it, stay long it until the Facebook IPO. So we shall see. It looks good. Ren came out with some news. It started perking up yesterday, saw some volume there. Nice little pattern here. I talked about it in my radio on the chat. Bought a little bit yesterday. I was hoping that intraday you could buy it to clear this, but it already happened. It's now trading above 6. There's some news with Microsoft. I do think that the next resistance is up here. So if you long it and you think you could add, we'll look for an intraday setup, and we could be seeing $7 pretty quick, and maybe even above that. Microsoft has a pretty big platform, and it's a pretty big win for Ren to be on there. I didn't read the news thoroughly, but that's what my staff was telling me because I came in a little late. Friday's the day I take Chase to daycare, so that's why we start this so late. As far as commodities, GLD, we talked about an area that could pose as resistance, 167.50 to 168.50 as your line in the sand for composure. I do think it's opening down a little bit. So see what happens here. This is the line that I drew yesterday. So the longer it stays below this line, the more, or the higher probability that it can continue to the downside. So, keep that in mind, and then also look at yesterday's inside range. If it starts breaking below yesterday's low, then you have the low from that hard break on Wednesday. If it starts breaking above yesterday's high, then you have that. So, if you're trading gold and silver, that's what you have to look at. So I have to close it up because it is getting close to the open. It's been a really good week, guys. A lot of one-off type strategies, lots of different types of strategies for the longer-term investor, for the 1 to 3 day investor, for the intraday trader, the cash flow trader. You've had some opportunities to make some money on your hedges if you covered them into support to fund your long positions. You've actually even had some cute shorts set up here and there. So there's a lot going on, and the only way you're going to capitalize it is if you approach the market with a plan, with a positive attitude, and don't be upset if you miss things in the past, because I think there's going to be a lot of great action in the future. Have a great day trading. See you at the recap.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.